And I, on behalf of all my fellow Rotarians, I send you all a very warm welcome. Today, our chief guest is District Governor Rotarian B.L. Nagendra Prasad, but he is held up somewhere, but he would be joining us a little later. And as we go on, we will talk to him as well. I would also would like to warmly welcome Rotarian Dr. Radhakrishna. I don't think he has logged in yet, but he is also a district director of vocational service. Thank you for your presence here this evening and for adding value to the event. We have lined up a lot of expert speakers to delve into the theme of the webinar. Let me welcome Chartered Accountant KG Acharya, who is no stranger to Prime. We often call him to decipher the central budgets for us, always obliged us. Today, we look forward to hearing him give his insights.
Light throw up करते हैं ये वाला.
I also take great pleasure in welcoming Ms. Rachna Buzari. She is the head of MSME at National Stock Exchange, and Mr. Parth Shah. We thank you for taking time off from your busy schedule to address us. We value your presence here this evening. It's also my pleasure to welcome our friends from FKCCI, State Bank of India, CASIA, Institute of Chartered Accountants of India, Marwari Samaj, and a lot of members from the Industrial Estate Associations. I would also like to welcome PDGs, Skyrocker co-presidents, Rotarians, and my fellow club Rotarians. I once again welcome all of you all for this very interesting program that we have on MSME called the Financial Discipline and Funding Options. Thank you so much for giving me time. Over to you, Chetan.
Thank you, Vibhakar ji. I'm sure there are many of us in this audience today who are MSME entrepreneurs or part of the MSME ecosystem. We are all very much aware that MSME plays a very key role in the Indian economy. They are, in fact, the growth accelerators. They play an extremely key role in the Indian economy. Today, MSME, as you're all aware, contributes to 30% of India's GDP. They contribute almost 40% of the total exports and have a total workforce of almost 11 crore people across the country. You know, that's the kind of immense value that MSME is creating in the Indian economy. The Indian government has recognized this, and over several years, they have been giving various schemes and incentives for the MSMEs to grow. And the last 2-3 years have not been any different. In fact, our Honorable Union Minister for Micro, Small and Medium Industries, Shri Nitin Gadkari ji, has said that he would like to see over the next 5 years the MSME to grow to actually 50% of the GDP, and also increase the workforce from 11 crores to 15 crores. So that's the kind of importance that the government of India is giving the MSMEs, right? And so even during the economic distress that we all went through in the MSME segment due to the pandemic, the Indian government has announced a few schemes, namely the emergency credit line, where a lot of MSMEs got the benefit of 20% of their working capital, which was due on February 28. They got a collateral-free credit lines that was provided by the Indian government. In addition to that, they also provide the subordinate debt scheme, where the government financed the promoters' contribution. So in this way, there's a lot of impetus being given to the MSME. It also, the government of India revised the definition of MSME. As you're aware, in June 2020, the government revised the guidelines for MSME, micro, small and medium scale industries. They redefined where an element of turnover and investments were brought into the thing. So all these things have got reclassified, and they've also brought manufacturing and industries. So there is, what I'm trying to convey is MSME plays an extremely key role, and it's important that the MSMEs survive and grow to ensure that the Indian economy is growing in the right direction. So at Rotary Bangalore Prime, we realized that it's an important thing to have a program that gives our fellow MSME entrepreneurs and people in the MSME ecosystem some insights into what it is to have a proper financial discipline to ensure the survival and growth of MSMEs. So today we have invited, as Vibhakarji said, the eminent speakers in this line. One is my very good friend, Gurraj Acharya, whom I have known for almost 30 years, a chartered accountant. He would be speaking about financial discipline, and Rachna Busuri ma'am will be speaking about the NSE, where you can actually approach NSE stock exchange for raising capital, and Mr. Parsha will be talking about the various opportunities that you have to raise money from the various sources of funds, right? So this is what it is. And before I request Mr. Arvind Salapuria, my colleague at Rotary Bangalore Prime, to share a little bit more thoughts on the program and what the three speakers will be talking, I would just like to give you some quick thing of what today's programs will look like. Of course, we are waiting for our chief guest, DG Shri B.L. Nagendra Prasad ji, to be joining us. Once he's there, we would request him to address us.
Chetan Rotary Nagendra Prasad is on the line.
Oh, yes, sir. Good evening.
Here,
Welcome to the
DG is
program.
here.
Good evening, Chetan. I've been hearing your talk. Yeah.
Okay.
As far as our director,
we were expecting a bit late, so thank you, sir. Thank you for joining us.
As well as our
So
director of
then,
operational service, Dr. Radhakrishna is also coming.
Okay, welcome Dr. Radhakrishna to the program, sir. So today's program will be, the next immediate will be the address by our chief guest. Then we will have followed up with Arvind Salapuria, who is going to give an overview of the three topics that's going to be discussed, followed by the three speakers. And then we'll plan to have a short panel discussion where I'm going to moderate the session with all the three speakers. And then we'll have a closing remarks by Mr. K. Raghu, who is the past president of ICI and fellow member at Rotary Bangalore Prime, and then with a vote of thanks. I'm very sure and confident that your program today will be very interesting and a lot to take home today. I would now request our past president of Rotary Bangalore Prime, Mr. Vijay Kumar, to kindly introduce our, he doesn't need any introduction, but still as a formality, we request Mr. Vijay Kumar to introduce our chief guest and then followed by his address. Thank you.
Thank you, Chetan. Good evening, everyone. I consider it a privilege to introduce our district governor, Rotary Nagendra Prasad BL, to this accomplished gathering. Nagendra Prasad is the elder son of down-to-earth couple, Srimati Sharda and Sri C.V.L. Shastri, who is a well-known personality in Kannada film industry. With a sharp eye on fineness and perfection, Nagendra Prasad excelled in his professional career. As managing director of Skytop Builders, he has developed over 8,500 residential plots in over 1,100 layouts in Bangalore and Mysore, are currently developing a 18-hole golf course with clubhouse and other sporting activities on a 140-acre land in Mysore. He continued his family legacy of film production with equal ease and comfort. His mother, Srimati Sharda Shastri, who was the inner wheel chairperson of RI District 319, and his father, late Sri C.V.L. Shastri, as an active member of Rotary Bangalore South West, were the great influence on him. He started his Rotary journey as a Rotaractor in Rotary Bangalore Penia way back in 1984, and later became president of Rotary Bangalore Sadashinagar in the year 2011-12, and bagged the Star President and Outstanding President Award in the district. After which he joined Rotary Bangalore Penia, and he served the district in various capacities as follows: Special Aid to District Governor, District Conference Chairman, Chairman of Multi-District Pets at Sri Lanka, Chairman of District Awards Night, and as Assistant Governor, and as also District Secretary. Rotary Nagendra Prasad has not only contributed his time and expertise to Rotary, but has also become the member of Archcom Society by his contribution to Rotary Foundation of $250,000, including an endowment of $25,000. Currently, as District Governor, he has led our district to #1 position in membership development for the number of projects undertaken by the district, and a contribution to Rotary Foundation, prompting Rotary International President-elect Rotary Shekhar Mehta to call him as pioneer of Rotary International. Apart from excelling in Rotary, he has a rich legacy of business career that has won him awards and accolades in various institutions. The list is quite long. Hope Nagendra Prasad will excuse me for not going into it. He has generous support from his family, wife Rotary Meera Prasad, and daughters Pragna Prasad and Preksha, both members of Rotary Club of Penia, and son Pranav Prasad. Here I present our beloved District Governor Rotary Nagendra Prasad to the gathering.
May I
Thank
request?
you.
Thank
may-
you. Thank you, Vijay Kumar. Thank you. May I now request our chief guest, BGBL Nagin Prasad, to address the gathering, please.
Thank you. Thank you, Chetan, and thank you, President by Club, this prestigious club, Prime Club. I think today I have chosen one of the best topics, financial discipline and funding option for the MSMEs. I think that is what is required for this particular this time. I think everybody are facing a challenge, and I think the right topic you have chosen. And MSMEs, this is one of the best platform for all the entrepreneurs, and really this is absolutely required today's context. I think today we have wonderful speakers today. Speaker KG Acharya is here from CA, and Rachana Bhushan ma'am and NSC SME head, and Bharat Shah, Director Merchant Banking. I think each one of them, I'm sure they're going to throw light on how the MSME work. And today, I think what I'm seeing is we see the stalwarts. All the stalwarts are like Shiv Kumar, past FKCCI president is here, and many past district governors are here, and Jacob Krasta, I could see, is here. I think the stalwarts of all the Kasia and FKCCI, they're all there. And my friend Raghu is here, I know, who's one of the leading chartered accountant, and many of the Rotarians of this prestigious club. I think this shows that the MSME is such an important backbone for any industries, and the entrepreneurs are very important to us. We need to handhold them, and I think you have chosen a right subject. That is what I would say. Congratulations to our Rotarian Vibhakar Menon, and also Chetan Venugopal, who is the director, and also my friend Arvind Salapuria, MC member of FKCCI, and also the member of this prestigious club. As Rotarians, I think as a district governor, we always talk about discipline in finance, discipline in business, which is the most important thing. Being an entrepreneur and a builder, I know what is the importance of this finance, and I think this discipline for a sustainable growth is absolutely required. I'm sure that this financial discipline for this MSMEs are very much important, and that is what it determines the success, the sustainable growth, and the future of the MSMEs for themselves as an entrepreneur. I think having a personal experience as an entrepreneur and associated with many companies in my career, I think I feel that financial discipline is the most important thing. Those days, I think, friends, when we started the business, we didn't have so much of exposure, nor we had any handholding like this from the government or for the private institutions or the NGOs like Rotary, which has been doing. I think I would say this, all these entrepreneurs for today, I think they're all lucky on that, having such great speakers, sparing their time, they're sharing their expertise is itself is a big value. The practical experience, that important thing. I always value that rather than the theoretical, because they know that what they've heard, what is the mistake, and they know that once the mistake is done, that can be erased, and then the entrepreneurs who are following us, they could put on a proper track. I think sometimes what happens is we have habitual of non-payments on time and not keeping up certain financial disciplines, and then outdated frameworks. All these things actually makes us go out of the business. I think this is what we all have to learn, and today I'm sure these great speakers are going to teach us and give us a lot of how to organize and structures that is going to take the entrepreneurs to the next level. And also, as a Rotary organization, we always believe in multiple discipline, mostly in the financial discipline and stewardship. I think that is the most important thing in Rotary. That is what we keep telling all our presidents, the members at every part of time, the directors, and that is what Rotary believes. And the Rotary, this Prime has taken a right step in taking up this program. And I wish each one of you all the best, and thank you for choosing this particular program in the vocational service. And I could see our Radha Krishna PM Radhakrishna, Vocational Service Director, is also here, who has been driving the entrepreneurs because I've been closely associated with him as a Rotarian. I've been visiting many of his programs, and he has such a passion for the entrepreneurs and startups. I am sure he's going to be a part of this particular program and support this program as a director for the vocational service. And I thank you, and I wish each one of you all the best. And I'm sure this challenging times is going to bring us a lot of opportunities like this, and this opportunity will be definitely converted. And my request to each one of the youngsters who are here, please wait, have patience. Once you have the patience, I'm sure the challenges will always turn to an opportunity. So thank you very much. And as you know that this Rotary year is coming to an end in 19 days. I have one after one back-to-back meetings, and a lot of things are happening. It is the membership, as you said, that we are number one. Thank you, Vijay Kumar Purvati, for introducing, and the membership now, the TRF, and many and projects completion. A lot of things are happening back to back. So you have to excuse me. I cannot stay for a long time, but once again, I always believe that the RMB is one of the Rotary Men's business. I've been always been telling everybody that business finance is the most important thing for any Rotarian to sustain, and similarly for anybody to sustain in this world, the business, the money is most important thing. So I think this is the right thing. We have been pushing the youngsters, the Rotractors, the youngsters, entrepreneurs in the Rotary platform from many years, and we still continue to do for many more years. Thank you very much. Back to you, Chetan.
Thank you, DG. Thank you, DG, for your short but very valuable thoughts and encouraging words. Thank you so much for sparing your time. As DG rightly said, I think definitely all of us concur that finance is like the blood of the business. If you have the right quality blood, then your business is going to perform much better. So that's the reason why we thought that a topic on access to credit, access to fund is the right kind of a thing for all the MSMEs. So now I request my dear friend Arvind Chalampuria to give a better overview on the three topics that we are going to cover. Arvindji, over to you, sir. You're on mute. Arvindji, you're on mute.
Yeah. No, you can hear?
Yeah, please.
Yeah, go ahead. Okay.
Very good afternoon. Welcome to our chief guest, District Governor Rotarian BL Nagendra Prasad, Rotary Bangalore Prime President Rotarian Vivakar, our director, Vocational Service Director Radhakrishnan. We are lucky to have him. Our Vocational Service Director Chetan, and our panel speaker, Chartered Accountant KG Acharya, Vice President NSC Listing Head. She is supposed to join within next 5 to 10 minutes. Mrs. Rachna Bhushari, Merchant Banker, Mr. Parth, so many PDGs of Rotary District 3190, Senior Vice President of FKCCI IS Prasad, Past President of Institute of Chartered Accountant of India K. Raghu, Central Council Member of the Chartered Accountant of India Durgesh Kabra, ex-CGM of State Bank of India, State Bank of India Rajni Mishra, and ex-CGM of State Bank of India Ashwini Mehra, so many senior officers of State Bank of India, past President, MC member of the FKCCI, Captain of Industry, member of FKCCI, Kasia, Davaspet, Pinia, Electronic City, Bomchandra Industry Fusion, member for Agrawal Samaj, Karnataka Marwadi Samaj, fellow Rotarian, and member of CA fraternity. Welcome to all. Presently, we have 144 participants. It shows the importance of the subject. Rotary Bangalore Prime has arranged this webinar, Financial Discipline and Funding Option for SME. During last 1 year of pandemic, we have seen that SME has been badly affected. However, some sector of the industry has done well, like health, pharma, steel, export-oriented unit, large corporate house. At the other hand, some sector of the industry has not done well. They are badly affected, like realty sector, luxury goods, furniture, hotel, aviation, tourist, garment industries. There will be another other effect of the pandemic. That is, after pandemic, there will be shortage of labor, skilled and unskilled, as well as there will be shortage of demand. Hence, SME who has done well, they will like to go for expansion, and who have not done well, they have to restructure their finance. Unit has to balance its debt equity ratio, search new avenue of fund at low cost or nil cost through equity market, venture capital, private equity, or low cost borrowing. SME has to focus on how to maintain financial discipline, use its resources, realize its debt, funds, repayment of installment of term loan. Last year, RBI has funded SME 20% as a COVID loan. There people are saying this is the COVID loan granted by the RBI and given the liquidity of 2.7 lakh crore in the market through SME. But I tell you, if SME does not plan it properly, it may become suicidal for the SME. If they don't repay this loan in time, it has to be paid in 36 installment. If it has not been paid, it will be suicidal for the SME. Considering above points, this webinar has been arranged to make member in industry more equipped. We have three panel speakers, well-known financial expert, Mr. Acharya, who will address financial discipline for SME. Listing head of National Stock Exchange, Ms. Rachna, will address listing of SME in National Stock Exchange, and Mr. Parth will address alternative source of funding. Most of SME hesitate to enter into the capital market due to the high cost of listing, number of compliance, and loss of ownership, and always approaches to bank for the funding. There is a limitation of the promoter fund and debt fund. That is the reason it becomes hindrance in the growth of the SME after a particular level. For an example, SME unit having promoters equity and reserve of rupees 5 crore rupees can avail maximum 15 crore rupees by way of term loan and working capital from bank and financial institution. Same SME unit, if it goes for the public issue, that can raise 15 crore rupees from public issue, and then further 40 crore rupees by way of term loan and working capital from bank or financial institution. In the first case, the total funding with a unit is 20 crore. In second case, the total funding to the unit is 60 crore. What is the debt equity ratio? In the first case, where SME is not going to the public, it is 3:1. Second case, when you go for the public issue, your credit rating debt equity ratio is 2:1. The SME which goes for the public issue have the better risk taking capacity. During pandemic, we all have seen that our capital market index has touched all-time high. Profit of the last 2 quarters of top 100 company is 50% higher than last year profit. Top 1000 listed company has repaid to the bank 1.7 lakh crore to reduce their debt and interest. At the same time, we have the financial survey that SME, 57% SME is not in a position to run and they are going to close. They are not in position to service their debt. Big is going to be bigger. This listed company are getting the share, grabbing the market of unlisted company or SME. Today, our expert will explain us importance of financial discipline, bottom line, credit rating, debt equity ratio, usage of long-term and short-term funding. What is the real valuation of your business? At what price SME can raise equity? How private equity partner can enter and exit from your business? And with this, how SME can create their wealth, become real Atmanirbhar. This is the real Atmanirbhar and make SME large. Thank you to all the participants, and I hope this all three panel speakers will focus the light on the subject. Thank you.
Thank you, Arvind ji. You have so nicely brought into focus the precarious situation MSMEs are into today, especially because of the pandemic. And if they're not very careful and professional in the way they're going to deal with the funds, they're going to be in very big trouble. And that's the reason, as you rightly said, we have tried to arrange this talk so that our experts are going to show some light as to how this could be managed. Now, I request Mr. KG Acharya to start the main session, please. Before he does that, I'd like to make a quick introduction of CA KG Acharya. KG Acharya, he hails from the Temple Town. He was born in Temple Town, Udupi. He was brought up in Iron City, Ballari, and now he's well settled in the Knowledge City, Bangalore. So that's a nice tagline, you might say. And then he's the senior partner at KG Acharya, and they're specialized in corporate taxation, corporate finance, and corporate law. He has had an excellent academics as well as I think he was a first ranker in BCom. He got his 21st rank in intermediate CA. He got 10th rank in 10th CA final. He also got his first rank in ICAA and third rank in ICAA final. So absolutely brilliant academic record. Besides that, he's a very much sought after speaker in many of our CA forums. He's a member of the Bangalore Financial Reporting Review Group, formulated under the aegis of the Financial Reporting Group of ICA in New Delhi. He was also a past director at State Bank of Mysore. I request Mr. KG Acharya to enlighten the entire audience on the financial discipline and management in the MSME. Over to you, Mr. Acharya.
Thank you, Chetan. I'm so happy to be in the midst of the great service providers to the nation, Rotarians. Thanks for inviting me here and allowing me to express my sense of financial discipline for MSMEs. Chetan, you were right in saying that finance is the lifeblood of any business. But then if finance is the lifeblood, I would say financial discipline is adding grammar to that language or adding grammar to the entire language of finance. Now, having said that, Arvind, thank you so much for that passionate introduction as well as talking to me and telling me what I should speak for this particular forum. I mean, the overall points as to what you wanted to come out for today's discussion. In fact, in your opening remark, you mentioned that there were about 144 participants. Whenever I see this 144, it also reminds me of section 144, which is required very much for this present situation. So having said that, I also heard the name of the participants which you mentioned. There are stalwarts sitting in the forum today. In fact, I am totally intimidated by the stalwarts. Maybe I am a micro, small and medium person in front of all the participants today. They are quite large, and that way, I mean, it's a great honor for me to express my opinion. Thank you once again for allowing me to come on this August forum. Having said that, MSMEs, we know, are the ones who are at the bottom of the business pyramid. Although they have, the bottom of the pyramid looks very broad, they take the entire load of the business in a different sense also. They bear the entire weight of the business. What makes MSME difficult? What makes MSME difficult, as in my experience, is that they are very, very intimidated by the large-scale operators. Having said that, they also operate therefore with low margins. They operate with low margins. They have high fixed costs. I mean, as opposed to having a variable cost structure, they're going for high debt, as Arvind was rightly talking about. For a MSME, if he talks about going into a stock market, it will be looked down initially. So therefore, he goes for a high debt and mortgages his entire personal properties and always carries the risk of losing all of them. And then his pockets are very small, in that sense he doesn't have a deep pocket. So therefore, his reserves are very low. So therefore, and then the worst part is because his pockets are low, he will not be able to hire the best of the consultants or the best of the employees. So therefore, he falls in a vicious circle. And especially during the pandemic, I think it is the MSMEs who have closed down their shutters. That is the worst case situation, or have faced the worst situation in that sense. So what is to be done? What is to be done? I always say, of course, keep a tab on the cost control. Cost control is very important at this point in time. Going for austerity measures. Don't go in for massive expansions when the things are not very optimistic. And then seek support from all the stakeholders. And then we always say, be innovative in your thinking. Arvindji, I always keep telling this, in business, we have got three important, a businessman sits not on a four-legged chair, he actually sits on a three-legged chair, three-legged chair. The three legs of the business are marketing, production, and finance. If I ask each one of you, which is most important, whether it is marketing, marketing department, production department, or finance department, normally when I ask these questions, people come out with different views. Maybe if I ask this question to Raghu and Chetan and Arvind, they say, of course, finance is important. And if I ask this question to a person who specializes in marketing, he says marketing is important. And then, of course, a person who is passionate about production and is in the factory all the while. I know Mr. Suleiman Jamal. Whenever I give hands to shake hand, he will give his wrist to say, my hands are dirty. You can, tap my wrist. So having said that, a person who is into production will be passionate about production. But like I already said, a businessman sits on three legs. All the three legs are very, very important. But having said that, the renowned marketing guru, Peter F. Drucker, went on to say, and I really like that quote, that the most important thing in business is marketing and innovation. Everything else is a cost to the company. Everything else is a cost to the company. So therefore, marketing and innovation. I would highlight the word innovation more than marketing. Innovation not only in the field of marketing, innovation in the field of production, innovation in the field of finance, innovation in the day-to-day activity. I think Kaizen, what we talk about in the Japanese terminology, continuous improvement. Today we are not talking about evolution. We are talking of disruptive thinking. I think innovation is the key. Having said that, of the three, I personally feel which is most important is the one marketing department, production department, or finance department, which is the most important. I personally, if you ask KJ Acharya's opinion personally, I say that the one which you don't have is the most important one. Arvindji, you will feel that the little finger, the left hand little finger, doesn't do much. Then let you, by mistake, if you cut it through a knife, it will show off its importance. What I mean is, of the various departments, the one which is probably, that's why they say the strongest link, the strongest point of a chain is that weakest link. If you do not have a particular, any particular department is weak, maybe that is the department which is actually dragging your business down. So having said this, now let me put up my 5 or 6 slide presentation. I'm aware that I have been given about 25 minutes to talk about my scheme on financial discipline for MSMEs. Arvindji, can you just show a thumbs up and say if the screen is visible? Yeah, great. Thank you so much. I will just put the full screen. Yeah. As Chetan rightly said, that there has been a change in the definition of MSMEs with effect from 1st of July 2020. About 1 year since that this definition has changed. So what are these points? Of course, these numbers, everybody will be, I mean, it is very easy to read the numbers. I don't have to talk about the numbers, but as Stephen said, earlier it was talking about only investment based classification. Now it is not only investment based, it is investment based and turnover. So that means if your investment in plant and machinery is less than 1 crore and your turnover is less than 5 crore, you classify, you fit into the definition of micro industry. Similarly, if your plant and machinery is less than 10 crore, investment in plant and machinery is less than 10 crore and your turnover is less than 50 crores, then you are classified as small. I would stop there because most of the benefits available to the MSMEs, I think we have to shell out the other last M because it is available mostly to the micro and small industries. Although the medium industries are there, 50 crores and 250 crores, but most of the benefits that are given by the bank or by the industry ministry is towards micro and small industries. What are the points to be noted at this point in time? Any one of them breaching, you go to a next class. So the point number 1 to be noted is if the investment in plant and machinery is less than 1 crore, but your turnover is 6 crores. But if your turnover is 6 crores, you are classified as small industry rather than as a micro industry. So there is a possibility that you are, I mean, by virtue of your investment, you could be small, but by virtue of your turnover, you may become large. And in any case, you will become large in that sense. So what are the couple of points to be noted? What do you mean by investment in plant and machinery? That they have given a clarification to say that is the written down value of the assets of plant and machinery block in the as shown to the income tax department. And turnover, very interestingly, does not include export turnover. And who are all those who are covered? Those who are rendering manufacturing activity and services activity. Very interestingly, the point to be noted is traders are not covered. Traders are not covered. Having said that, the only traders who have, I know Mr. Sham is listening to this program from Advait Motors, Kaveri Motors, when they have lobbied, and rightfully so, that the dealers in automobile sector, are classified under a special schedule coming under MSMEs. Apart from that, no other trader is eligible to be classified under the MSME sector. Now, what are the point to be noted is earlier a person could have been other than MSME. Now there could be a lot of competition within the MSMEs. I mean, in that sense, Chetan was talking about the special scheme which was announced under the Atmanirbhar scheme, 3 lakh crores, which was announced under the ECGLS scheme. And it is specifically given to certain type of industries, especially the MSMEs have also been given some slots. But then the slots within that will be taken away by the cream of the MSME. So we need to actually, I mean, one of the threat as compared to the earlier situation is there may be more number of players who would be called as MSMEs. I mean, talking about a bank has to lend 35% of its lending to priority sector lending. And within the priority sector lending, MSME is considered to be one of the important segments of priority sector lending. So you have to be, I mean, now the banks will be going behind, not every MSME, but behind those MSMEs which are the cream in their eyes. So this is a point to be noted. So let me get to the, I have only 2 slides to talk about financial discipline. One of them is to talk about the do's and the other one is about the don'ts. So what are the things that a good financial discipline could mean? I mean, my first point is I would say respect the finance and accounts department. Although you may be good at marketing, although you may be good at production, if you ignore the finance department and the accounts department, I think the MSMEs are actually, I mean, MSMEs actually are prone to this particular disease where they feel that the finance department is only keeping a tab of what the activity, they're only a scorekeeper for the business rather than adding any value. This is the first mistake that the business, I mean, if at all you think like that, it could happen. So please don't consider the accountant or your finance person as your scorekeeper, but consider him as a wicket keeper or a goalkeeper who would probably enable you from, I mean, otherwise it will be a pot which you are filling, which has got full of holes. I mean, that could be the type of situation. Please understand this. And therefore, employ the best accountant, the best chartered accountant, the best advisor in this particular field. The second advice which I would like to give in terms of financial discipline is have a timely management information system and corrective action. Here, let me tell you that, it's almost June. How many of you, touch your heart and ask, how many of you have, maybe pandemic is coming in the way. How many of you, other than the pandemic, would have come out with your own financial statements by now? Listed companies, yes, they should have come by 30th of June. They have, 31st of May, they should have released their financial statements. But then, if you look into this, most of the MSMEs, where we audit, we come to see that they come at the last moment only for the purpose of they do their balance sheet. They feel that the balance sheet is required only for the purpose of income tax. Please understand, the financial statements are a very important, it's like a report card of the business. And if that report card is not timely, it would not give you any sense. It would not make any sense to you if you are reading it after 6 months, and therefore corrective actions can be taken. The biggest mistake they say, when I mentioned that we'll prepare your financial statement in the month of April or May, most of them say no, sir. Then I give the example of Infosys, Reliance. We say that they have already come up with their balance sheet. They say, again, sir, they are very big people. They are very big people, and they have an army of chartered accountants to take care of them. So therefore, they can come out with the financial statements timely. Let me tell you, it is not because they are big that they are coming out with timely financial statement. It is in fact the other way around. Because they are coming out with timely financial statements, they have become big. I think if we realize this, it is, sufficient for you to know and understand the importance of coming out with timely financial statements, timely management information system. I always say every business should have not only the financial statement of the past, it should prepare a proper budget broken down into monthly, quarterly, and annual budget, and have a proper forecast. Involve the right people when you're doing that. And with respect to every project, it should not only be the the overall profitability, it should be sliced down to project-wise profitability. It is possible today, even in your ordinary accounting software like Tally, it is possible to have a cost center-wise profitability. Which department or which customer has given you the profit, and probably concentrate on that customer which is giving you a higher profit as opposed to the otherwise. So the next point I would like to say, especially this could help, is to move towards the variable cost model and the outsourcing model wherever possible. One of the bane of the MSMEs is that they have a high fixed cost. If their turnovers drop, immediately it will result in a loss. May I request all the people who are not speaking to mute it so that it would not disturb them.
Yes. Yeah. Kindly mute, please.
So please move into the variable cost and the outsourcing model, so that any department which is not doing well, in case your turnover drops, like in the case of a rental, we are suggesting all the people who are taking it on rent, especially in the mall, to go in for a variable cost rental. Going with my turnover. If I do my turnover, I will pay you rent. Otherwise, I will not. So that's a very important take home with respect to the financial discipline. And this is why I put it in red for all of you to notice. Every borrower from a bank has to submit quarterly monthly stock statements and quarterly information system, or QIS or FFR if it is called. Most of the banks, if they are lending more than 5 crores of limit, working capital limit or whatever limit they are giving, so they tell that they are not happy with your financial statement for the year, which comes once in a year. They would like to have quarterly information about what is your turnover, what is your position with respect to profits, what is your debtors, creditors, stocks, the various expenses. Is it in line with the projections that you have given? Now, what happens is, of course, the companies give this quarterly FFRs or QIS to the banks and the stock statements. How many of the companies actually draw it out from the financial statements? So that is the requirement now. Let me tell you why did I put it in the red, is to tell all the participants here that under the Companies Act, there has been a change in the balance sheet and the audit report format, wherein in the balance sheet, we have to say that the quarterly information system which you are giving to the bank is in agreement with your books of accounts. That means your books of accounts should be closed quarterly, and the information which you give to the bank should come from that quarterly financial statements rather than on a very provisional basis. And tomorrow, if there is any difference between what you have given to the bank and in the 4 quarters history, the company itself should say what is the variance and why the variance. And if the company does not say, the auditor anyway in his audit report will go on to say that there has been discrepancies between what has been given in the quarterly information system and the quarterly financial system. So in short, the preparation of quarterly financial statement is now required through the statute. So it is not sufficient if you have a financial statement for the year, but you need to have granular details of, I told you for management information system, it is monthly, but it should be very curated. The financial statement should come out at least on quarterly basis, ensuring that it matches with the stock statement and the quarterly information system given to the bank. If, let me warn you, if there is a discrepancy between what you have given in the FFRs or QIS and the financial statement, you could be classified. If the matter is very serious, it could go to the extent of you are being classified as willful defaulters tomorrow if the account goes bad. So please keep that in mind. The third point which I would like to highlight here is have proper internal control systems. Most of the companies are good up to a particular level. When they have 1 or 2 branches where the owner himself looks into the day-to-day controls, it is okay. But when you're growing, please ensure that the controls are put ahead of the growth. Have more controls than the growth. Don't grow and then think that I will put the controls. Then again, it will be like having a pot full of holes. You try to fill it with water, and the water is actually getting drained. So please ensure that the systems, the control systems or the internal financial controls are in place ahead of the growth. For what do you have to do? You will have to document your standard operating procedures, have proper internal controls. Then very important is use technology. Use the technology to the brim. We also have talked about having cameras and finding out, but that is of course very having cameras is the least of the things. The CCTV is the least of the thing on your mobile phone, but then you can have better control techniques. Talk to the people concerned, have proper controls, segregation of duties. Internet banking, when I was talking to some of my banking friends, they say that one of the things that the MSMEs are still very happy doing is signing the checks. While that is required for controls, but there are better controls. You can probably adopt internet banking rather than talking about writing the checks and wasting your time. Now, the fourth point which I would like to say is make your payments promptly. This is considered as a very good sign of financial discipline. Ensure that you make the payments promptly. It has its own rewards. It has its own rewards. You will be like for operational creditor. In the case of operational credit, we have 3 types of creditors. One is the operational creditor, the financial creditor, and the statutory dues. I have 10 commandments for business. One of the commandments that I always tell is pay your dues promptly. Arvindji, especially to those who don't ask. Especially to those who don't ask. Now you may be wondering who is that great person to whom I am payable and he is still not asking. Let me tell you, he is my son-in-law. The son-in-law means the statutory dues. The statutory dues have to be paid promptly, even without their asking. So therefore, ensure that you pay your dues promptly. If you ask me who should be paid first, I would always say pay the statutory creditor, statutory dues first, because they are the ones who are not asking the money. Now, then you may say, if they are not asking, why should I pay? But all of us know that they don't ask. But when they ask, they don't ask. They actually break the business and ask. Let me tell you, we have the situation of ESI and PF, where if it is not paid by the 15th of the next month when it is due, it is not that ESI and PF department is going to punish me. Income tax department disallows that particular expenditure permanently. So therefore, ESI and PF, please pay it promptly. Now, operational creditors, please ensure that you pay all your operational creditors promptly. I'm interested in quoting one of the nice quotes from Quran, where it says, pay the labor his dues, pay the labor his dues before his sweat gets dry. Such a beautiful statement. I mean, if you pay the labor his dues before the sweat gets dry, next time, whenever you want him to do the work, he is prepared to sweat for you. I mean, that is the message that they are giving. I mean, if you're delaying, I mean, you look into your own customers, you will feel that whoever is paying you promptly, you will get up from your chair and probably serve him. So that is a type of, and in any case, you have to pay. So why not pay him promptly and get his better service the next time rather than otherwise? And when it comes to the finance creditors, especially the banks, we have to know that, of course, within 90 days, if you don't pay your dues, it will be classified as NPA. But the bank has a mechanism of also monitoring are you paying it within 0 to 30 days, 30 to 60 days, or 60 to 90 days. Accordingly, you will be called as an SMA 0, SMA 1, SMA 2. I mean, NPA, all of us are aware, but this terminology of SMA, special mention account, 0, special mention account, 1, 2, means that if you are 0, means you are very good. You are paying your dues within 30 days. I mean, you ensure that you make a proper budget and ensure that payment is done on the appointed date rather than delay and anyway paid by 90 days. You will be marked as SMA 0, and tomorrow when some enhancements or some ad hoc facilities are to be given to you, you will be probably treated like a step son in that context. So please ensure that you pay your dues to the statutory finance creditor also promptly. I mean, all of this, I'm aware, I mean, I'm sure you are aware, that speaks on the CIBIL score. What is a CIBIL score? I mean, all this, you know, single check getting bounced, or your delays in payment to the bank, all of this, I mean, even to the extent of your credit cards, if they are not paid on time, or if you have availed excess cash drawns and things like that, all of them will be reported in CIBIL, and you will have a bad credit score, leading to higher rate of interest or denial of the loan itself. Then let me tell you one very interesting thing which is happening in the field of income tax. Income tax is becoming very, very watchful of every act that you are doing. They have something called the Form 26AS. All of us are aware of this Form 26AS. I'll just tell you that the scope of Form 26AS has got expanded. So what does this mean? Yeah. Today, Income Tax Department not only knows what is the TDS that has happened in your account, they not only know about how much advance tax you have paid, they know a host of information about you, more than what you know about yourself. More than what you know about. If you think that I'm closing my eyes and drinking the milk, you know, bekku kannu muchkondu haalu kudre prapanchake gottagalla ante ankoladu doddu tappu. Let me tell you that today there are mechanisms for the Income Tax Department to collect information. In fact, today they will tell you what is your capital gains from the listed securities. They will go on to tell what is the dividends on listed shares and mutual funds. They will also tell you interest from banks, post office, not only those on which TDS has happened. I mean, they also have a tab of linking up the GST with the taxable turnover, and then a lot of information like cash purchases, cash deposits, whatever dealings you do with the banks, credit cards, your purchase of immobile properties, all this will be known to the Income Tax Department. And today Income Tax Department comes out with what is known as pre-filled income tax return. They will tell what your income is, and you have to agree or give, I mean, of course, you have a right to override what they have told, provided you have justifiable reasons. So this is my last slide, which I'm going to say, and then I'm going to stop talking about what are the various don'ts with respect to financial discipline. One of the things that you need to know is diversion is the biggest enemy of business. I think Arvind was talking about this, saying that diversion could be of three types. If you are diverting short-term funds for long-term purposes, leading to an adverse current ratio, leading to a lot of adverse ratio, especially the current ratio, and diversion of funds to other ventures. Finish. At least diversion of short-term funds to long-term purposes is that much better because it is within the business. But diversion of funds to other ventures outside of the business, buying up of land, which is not at all connected with the bank, I mean, connected with the business, or buying up investment in stock market, borrowing from the bank and investing in stock market. Please never do that. Now, diversion of time to other ventures. When other thing is, you have, of course, money is properly lied in the system, but diversion of time is also a very serious offense that you can do to your own business. Never confuse profits for cash and cash for profits. I mean, always we see that you sometimes the profits in the profit and loss account, when I show you have made a profit of 5 crores, he will say, sir, I don't have 50 rupees in my pocket. You are telling you I made 5 crores. Yes, I will have to tell them that all the profits is blocked in probably the working capital, probably in the machineries that you bought, or probably in the loans that you have repaid. All the profits, I mean, if you want to really see profits in the form of cash, you have to go for employment. I mean, only when you are an employee, the salary is what we say is a take-home salary in that particular sense. Similarly, don't confuse cash for profits. The cash that you have itself is not the profits. It could be advance from customers or payments which you have to make, which is received by your supplier, I mean, from your customers and things like that. Or it could be a bank overdraft facility or something which is available in the form of cash. Don't write a check for that. It is not your profit. Lavish, avoidable expenditures. High personal expenses of promoters. When we have seen this, whenever loans are sanctioned, the first thing that they do is go and buy a big car. I mean, don't never first going for this is the achieve your business objectives and then going for your personal lifestyle changes. Inefficient working capital management, and I don't emphasize this more. High inventory, holding stocks without order, overproducing and piling up of finished goods, delay in collecting receivables, over leveraging. Over leveraging means borrowing without adequate margins. I mean, you may think that how will the bank know? Please understand, any inadvertent situation will be known to the banker who is your partner sooner than later. I mean, maybe it could be delayed, but any amount of window dressing, you cannot withstand with that for a longer period of time. So the last thing I would like to say is, avoid making aggressive forecasting. While aggressive forecasting is required for please ensure that you under promise and over deliver, especially to your bankers and stakeholders rather than the other sides. I mean, this is what happens, especially Arvindji, you wanted me to tell this point that when you over promise, when you make an aggressive forecasting, the banker will feel, okay, you have a very good profit margin, so therefore why don't you repay it in 5 years? I mean, you will also feel that, okay, it is possible for me to repay in 5 years, whereas it is actually permissible to repay it in 10 years time or 9 years time, and you have taken a 5 years, so it will be carrying too much of a burden on your back. Similarly, don't take EMIs as the basis for your repayment. Always the repayment should be on ballooning basis rather than on the EMI basis. I have to stop here. It is 5 o'clock. I can only say.
Thank you, Mr. Gururaj. As usual, as always.
Our mission statement in business, Chetan, must change from getting funds to making a profit. I think if this is the objective,
absolutely,
it will be the biggest financial discipline. I'm available to you for any questions.
Thank you, Gururaj. Thank you once again for a very enlightening talk. As usual, it's a financial mantra, so to say. You have brought it out so very in a simple and in a very lucid manner. Thank you so much. And yes, I would like to recap or kind of concise your, so to call it, takeaways from your talk. Basically, your advice is adopt in the current situation, adopt austerity measures, ensure there's no big bang expansion, be innovative in your thinking, and always adopt a continuous process, the improvement. That is one of your advice, 3 or 4 advices, key advices that you have told us. The other thing is, what are the do's and don'ts? Quickly, you have mentioned that one is, we have to respect finance department. It's important to have a very professional finance department. You have a proper month close. You're able to get to understand your profit loss on a periodical basis, your creditors, liabilities, etc. You're aware of it on a real-time basis. Ensure that you're implementing internal controls in the company, ensuring that you have a documentation for internal controls. Ensure that you have an internal audit being carried out. Also, adopt technology as a smart way of doing your business. Besides that, it's important that you keep your creditors happy. Your statutory payments should be made on time. Your operation creditors should be made on time, and of course, the banks has to be taken care of. Today, there is a through technology, CIBIL as well as the government authorities are tracking what we are doing. It's not that they're not aware of. So any default in your credit is going to be flagged off by CIBIL immediately, and you will be flagged for any future credit opportunities. And so is the case of tax authorities. And don't be careful in the utilization of funds, no diversion of funds, short-term to long-term. Ensure that you understand the cash versus profit. Don't be lavish in your expenditure. Have an efficient working capital system. Don't over leverage. You should have a balance between your debt and equity, and don't make any aggressive forecast. So this is what I understand from your talk today, Guraj. Thank you so much for highlighting all these key points. I would like to then move on to our next speaker of the day, Ms. Rachana. Good evening, ma'am. Welcome to the program.
Good evening, Chetan. Thank you. Thank you so much.
Yeah, thank you so much. Yeah, so Ms. Rachana, she heads. Yes. So Ms. Rachana heads the National Stock Exchange SME division. She is the Vice President of National Stock Exchange for the small MSME segment. Yeah, sorry. She is responsible for the business development initiatives of NSE for listing of equity and debt, and for corporates, startups, SMEs on the browse, as well as NSE IFC Gift City. She is a postgraduate in financial management and commerce and a law graduate with almost 21 years of experience at NSE. Prior to her current role, she was responsible for regulatory function of exchange at the exchange, namely investigation, surveillance, and member supervision. I now request Ms. Rachana to go ahead with your talk, ma'am. You're on mute. Ma'am, you're on mute.
Yeah. Thanks. Yeah. Thanks, Chetan, for this brief introduction. And at the outset, I want to thank Mr. Arvind for getting me on board today. And he's been extremely supportive in facilitating the whole program. So thanks, Mr. Arvind, to you as well. And a big applause to Rotarians for holding this session and getting all of you together for this kind of a session. It's like 160 participants. I was like floored when I saw the kind number of participants, and this is really amazing. It really gives us, energizes us to talk to entrepreneurs, to tell them what are the initiatives that various bodies are taking for them. And we feel a sense of, a kind of being there to help you, reach out to you, and explain to you what are the various initiatives that we have with us. So thanks again for all this initiative. And Arvindji has given me some areas where he explicitly wanted me to touch upon. While I go through my talk, I will be touching upon those areas also, and post that, you all can just put in your questions and I'll be more than happy to answer them. From my team, I have Himanshu on the webinar today, and Jayesh Tauri also is there. And Parth is a very experienced merchant banker who has been in the SME, who has been in the SME area for a very long time, and he would be able to guide you through the entire process of SME funding. Before I begin, I want to just thank Mr. Acharya for bringing those do's and don'ts. And while I was listening to him, I also realized that it is not just for a businessman or an entrepreneur, it was even for an individual. It was very important that we understand those do's and follow them in our daily lives for financial discipline, because even as an individual, we need to have a financial discipline in place. And I think some of the do's and don'ts, even I could adopt out of it. So thanks, Mr. KG Acharya. It was really very informative and learning for us as well. So here I go. This is NSE. I will be talking to you today about the various funding mechanisms that is available for SMEs, and I will explicitly talk about the funding initiatives or the funding platform that NSE has in place for small and medium enterprises. This platform of NSE is called the Emerge platform. And to give you a brief about why the Emerge platform and how Emerge platform is different from the existing platform, I'll just touch upon the same. So in 2012, up to 2012, what would happen was that most of the companies, larger corporates, were able to tap funds through the public mechanism using the stock exchange mechanism. So the larger corporates would come up with an IPO, raise funds through the financial markets, and fund their business growth. But this opportunity was not given to the small and medium enterprises. And what was happening was that it was realized that the small and medium enterprises, though they are the highest contributors to employment, industrial output, exports, and a strong GDP growth of any country, it was realized that SMEs were not able to grow at a pace that was really required for them to grow and prove more beneficial to the country. So what was one of the showstoppers was the funding challenges of SMEs. So what we observed that traditionally the SMEs would fund themselves, they would be bootstrapped. So the promoters would bring in their own funds from the families and everybody. And post that, when they needed further funds, they would approach the bank would lend the money to them, and they would be exhausting their collaterals, taking funding from the banks. And after that, they would hit a roadblock as to now where do we go about, because our business needs more funds and we see a lot of growth potential in us, but we're not able to fund ourselves. That is where the challenges were, and the SMEs growth was getting stuck. And that is when the platform for SMEs was decided that they should have an avenue even to tap the capital markets. And the SME platform was introduced in 2012. And both the exchanges, NSE and BSE, launched their platform in the same year and had their first company listed on the platform in the same year as well. While designing this platform, a lot of efforts were kept that we tap the existing ecosystem that is available. We tap the existing facilities that are already available for the primary markets and differentiate only where required, so that we are able to, actually carve out a platform which helps the SMEs and capitalize on the ecosystem that was already existing. So to take care of that, it was ensured that, all the brokers of the stock exchange who were trading otherwise onto the capital markets be allowed to trade on SME segment without any further requirements. Similarly, for investors, it was said that existing investors who trade in the main board companies can trade on the SME platform without any further requirements. So that portion was taken care of. With respect to intermediaries, all the merchant bankers who were, helping the larger corporates raise funds, it was felt that those category of merchant bankers, the category 1 registered merchant bankers, can continue to do the same even for small and medium enterprises. So an effort was put into place that we don't have to create a newer ecosystem, but bank on the existing ecosystem and allow the SMEs to tap the capital markets. But were the SMEs same to that of a main board? Were all the rules that were applicable to the main board companies be made relevant even to the SME companies? The answer was a big no. So how do you differentiate there? And how do you ensure that the newer platform created helps the SMEs come to the financial markets and raise the funds? So what was done was that the eligibility criteria or the onboarding process or the compliances were differentiated so that the SMEs did not find it difficult to tap the capital markets. To ensure that the credibility of the platform is maintained, it was supposed to be regulated by SEBI. So it was another segment on the exchanges with the regulation being headed over by SEBI itself. So all those things taken care of. The criteria for SMEs was that, and still they are like this, is that paid up capital of an SME will be the determining factor whether they become eligible to raise funds through the SME platform or not. So we saw in Mr. Acharya's slide as to what is a micro, what is a small, and what is a large enterprise. But what SEBI did is that they kept the definition of an SME very simple, saying that any company with a paid up capital of less than 25 crores would be eligible to come onto this SME platform and raise funds. So they did not borrow the definition from any of the current existing regulations or laws. They said that they measured it only on the basis of paid up capital of 25 crores and less. What NSE further did is to ensure that you have a strong company coming onto the platform. They have already shown their growth potential. They have shown some profits into their books. So that is when we said that we will take a company who has a 3-year of track record and a 2 years of profitability. So again, when we saw the 3-year of track record was becoming a showstopper, because we realized that none of the companies in the original avatar were either a public limited company or a private limited company. What they were being a sole proprietary firm, or they were a partnership firm, and they were not able to demonstrate a 3-year track record. So we went beyond that and we said that any promoter in the same line of business for 3 years, whether the company is newly incorporated or not, but backed by a promoter who has been in the same line of business for more than 3 years, is eligible to come and tap this market. So we made it very simple with a 3-year track record, 2 years of profitability and a positive net worth. So having established the eligibility criteria, we realized that most of the companies on the SME classified as MSEs would be eligible to tap this kind of capital markets. Then, you know what, when we started doing the road shows, talking to the MSMEs, we started realizing, started asking what kind of a company should come on this platform? Who can list on NSE? At what stage should they come on list for listing? And we said that any company who has shown a growth for some years, demonstrated profit. So they've already been funded by themselves. They have bank funding, and now they need further funds to grow. So their growth path has been established. They have proven their track record, but they need funds. These are the kind of companies which can come into the emerge platform. So if you look at the life cycle of a company, the growth phase is the phase where the companies will likely to fit themselves to tap this public markets. And once they are into the growth phase and they tap this financial markets, they are ready to go and launch themselves on the main board, because there is a wonderful facility of migration from SME platform to the main board platform. I'll talk to you about it as I go down the top of mine. So that was established once, that which kind of companies can go. We said that look, how the platform has to be designed separately, so that, you know, we don't find showstoppers when the companies are ready to come onto this platform. So the differentiators were identified as to what could enable an SME to come up with their IPO. The first differentiator was the main board mandated that you need to have at least 1,000 applications to complete an IPO. So you need 1,000 people to apply for an IPO. But in SME, that was a far-fetched number. We realized that with the regional presence they had, with the smaller kind of issue size that they were planning to come up with, this 1,000 number would look very, very large. So what was done was that this number was shrunk from 1,000 to 50. So what SME regulation says today is that any company can come up with an IPO which is eligible and have 50 applicants at the time of an IPO, their IPO will be successful. So now, having said that a smaller number of people would be enough to subscribe to an IPO, what happens in case of an unsubscribed IPO? Because that would again cast a fear on the promoter that I come up with an IPO, I'm not known to the people in the financial markets, I don't have a larger presence, my brand is not recognized. How do I compete for an IPO? So in that case also, the regulator brought in a very strong caveat saying that if your IPO is undersubscribed, it will be the onus, the responsibility of the merchant banker to completely subscribe your IPO. So they brought in a compulsory underwriting facility for this kind of a platform, which is not there on the main board again. So this was made as an differentiator factor for a SME company. The third differentiator factor was that these companies would be with a smaller issue size. These companies would be with a relatively smaller size of a number of applicants, which would again create liquidity issues in the secondary market. So if you have an IPO, you get yourself listed, but you don't have a vibrant secondary market, again, it could pose challenges for the entrepreneurs. And then hence the concept of market making was introduced for the SME segment, wherein it was said that the market maker will subscribe to the inventory at the time of an IPO and will give a buy and a sell code on a daily basis to ensure a secondary market liquidity. And this will continue for 3 years from the time the company is listed or till they decide to migrate to the main board. So these differentiators in the framework really helps the SMEs to come and tap this market. And while I talk to you, I can tell you that we had more than 200 companies which have got listed on this platform. This 200 companies, 215 companies to be precise, and they have come and raised more than 3,300 crores of funds onto the exchange platform. And overall, out of this 200 and odd companies, 70 companies have migrated to the main board. So that is the growth story that the platform has charted out for all of us. That the 70 SME companies who listed on this platform now today trade on the main board of NSE with all the top notches of the main board companies. So that is where we have seen the significant growth that these SME companies have demonstrated, not only in their business activities, but also in the financial markets of migrating from a smaller boss to a larger boss. What is that that the promoter should know at the time of thinking of an IPO? What could be the decision-making factors for him to say that, yes, I would want to go for an IPO? One is that we insist that, the promoter has to have a mindset which is open to accepting a scrutiny of documents by a regulator, by the public, because once you are in the listed space, you need to give your announcements on a regular basis. You need to share your financials on a regular basis in a very structured manner. So the mindset has to change about, holding the company information very close to our hearts and not sharing it with others. But having said that, it's very important to note that not all the information and your trade secrets are required to be shared with the exchanges on a public domain. So, this dichotomy exists that, I don't want to share information. I will, competitors will know about me and I will lose my business secrets. So no exchange expects you to share these kind of information. What we require is you to tell us what happened in your board meetings, which is going to make an impact on a decision making for an investor. We're going to tell you how your company has performed over a period of time. So please share your financials to the company. And this is in the larger interest because you're able to attract investors to invest in your company. We're going to tell you what your AGM is about, when your AGM is about, what your shareholding pattern is, what your corporate governance norms are, and how your board is structured. So, and these information is anyway available in public domain. We just have to dig it a little harder. I can find everything about a company on the public domain. But yeah, this is available to be given to a stock exchange once you are listed. So, please get the myth out of your minds that, I will lose my confidential information if I get listed. You don't lose any confidential information. Nobody asks you to tell how you are manufacturing your products. We don't expect you to share that. We don't expect you to share a secret formula for your masala that you are selling today. Nobody will expect you to. What we expect you to is give decisions or to show information which is going to help people take an investing decision into your company. So the promoter has to change his mindset. One of the mindsets, again, with Mr. Acharya touched upon in his earlier talk is, you will have to move away from a tax-oriented balance sheet to a growth-oriented balance sheet. Because today, all of us are interested in saying that, okay, I don't want to show so much of profit because if I show this profit, I have to pay this much of tax. No, that's not going to work because you've got to show profits if you want to attract investors. If you want to create a valuation for your company, you've got to show profits. And when you show profits is then when you will attract investors who will derive a right valuation for your company. So that's another important thing that the promoters must take care of, be cognizant of while they decide that they want to embark on a journey for an IPO. Another important perspective, and Mr. Arvind told me very specifically to touch upon, is a fear of loss of control. Is what drives a promoter to not list themselves onto the stock exchange. Again, that is a big myth, because what happens is that once you come up with an IPO, once you decide to come up with an IPO, you need to dilute only 25% of your liquidity. The 75% still remains with you. And with 75%, you don't lose your control. You're still the majority shareholder. You're still the major decision-making people in your company. The only thing that changes is that you have independent directors on your board, which will help you take a better informed and a very calculated decision rather than being a reckless decision maker. So it's a consultative approach that you will have to follow while taking your decisions. But nobody questions your decisions, at least from the shareholders, So this is something that is about more and more accountability, responsibility towards your shareholder rather than the fear of loss of control. I don't see, or I've never heard of in my journey of NSE of 20 years, any hostile takeover happen in India. That one fine day, the management just took over all the shares and some new company came in. It's been a very calculated, a very informed, a very thought about decision that, change of business, change of promoters take place. It's not just because you are a listed entity that happened by virtue of you being a listed entity. So please don't even think about that you lose your control. What happens is that, you don't lose your control. You part with your equity to fund your businesses. You're still the decision maker, and you are now in a position to have a very sensible, a very kind of an informed decision when you approach your shareholders, because you now have rich inputs from a variety of people who are associated with you by being a listed entity. So that's the thing that I thought about, that how promoters must actually change their thought process while they get involved into the other, even like internal controls, timely reporting, giving more power to your financing team applies even for these cases, because generally we tend to see that the promoters of SME companies, they are the decision makers, they are the executioners, and they are even they are the CPOs. They will hire people, they will run their accounts, they will also take decisions, they will also build export contracts. So they are one in all. I think the important point here is that you've got to realize that you are meant for strategizing, you are meant for revolutionizing your business, seeing how you can grow better, but you have to leave the execution, you have to leave the specialized tasks to specialized people. You need a CFO, you need a CS to do the task. You cannot be everywhere all the time. So that's something that, again, a promoter has to take care of while he decides that I want to be a listed entity. So that's about the financial discipline, or that's about the discipline in the organization structure that the promoter has to concentrate upon. And listing, I think this will be my last point, because Parth will share a lot on how you can go about listing yourself. So the last thing that I would want to talk about is how it benefits a promoter and a company to list onto the stock exchange. One is it brings a higher amount of visibility to the company and to the promoter himself. So being a listed entity is like, we know that India has millions of companies, which are millions of SMEs, but out of which, between both the stock exchanges, more than 500 are listed. So obviously these 500 enjoy a better and a higher visibility than the unlisted counterparts. So the credibility, the visibility is not just higher of a listed entity. The borrowing terms of the bank changes the moment you're a listed entity. They have a different set of requirements and a different rate card, I can say, in that common language that is being used across the banking fraternities, that they have a different borrowing terms at all when it comes to a listed entity. And this is what I can tell you from my experience, my dealings with all the promoters of the company, that each one of them has committed saying that they have a different borrowing term with the bank and they are enjoying lesser interest rate as compared to their unlisted peers. So that's a very, very advantageous thing for an SME company to be listed. They are able to have an appropriate valuation of their shares. They're able to pledge their shares and take as collateral, shares as collaterals and take further loan. The debt equity ratio improves, and hence they are able to better leverage themselves. And infusion of equity also allows them to infuse further debt capital into the company, which actually is a win-win situation. And people are able to, work better on their growth plans. So, the benefits are a galore of being a listed entity. And because most of the chartered accountants are here, I would want to say that you have to use this opportunity to see that, it's a win-win situation for the company as well for the chartered accountant, for all the intermediaries, because, you grow with your company. You are able to offer a wider basket of services to your clients. You are also an IPO specialist, and hence you are able to attract more and more clients to yourself. And one thing which, again, I can tell you based on my experience, and I think I've taken it with a pinch of salt, is that I have seen that no promoter takes a decision to go about listing without consulting a chartered accountant. That's the thing that they come back to us and say, I have decided to list, but I will base this decision of mine based on what my chartered accountant recommends. So you guys are very influential and very, very influential in saying which path the company has to take for funding themselves. And it's a very important aspect for you guys to understand more about it and then deliver it to your clients accordingly. So NSE is committed to facilitating the SMEs to raise funds, to facilitate the intermediaries who want to walk this path. And we do a lot of sessions. We organize a lot of road shows with various associations, and hence a part of it is today demonstrated here. We continuously engage with the central and the state government to see how various avenues could be developed with them to help you take on board. We have tie-ups with governments wherein the part of the fee is being reimbursed to the SMEs who get listed onto the stock exchange. Some of the governments have also created a corpus fund to invest in the equity of the SME companies which get listed. So we continuously on that path to ensure that we are able to reach out to more and more SMEs and bring out features which are very, very advantageous to this sector, because we are committed to facilitating this sector in fundraising, and we understand that SME is the backbone of Indian economy. With that, over to you, Chetan and Arvind, for any further questions or any.
Thank you, Rachna ma'am, again for a very simple and nice talk. You brought out all the nuances associated with SMEs listing on a national stock exchange, so beautifully brought out. You spoke about the reason behind which NSE Stock Exchange brought it about for the SMEs, basically to enable growth of these companies, to access funds for growth. You also very clearly brought out the eligibility criteria for listing, be it a paid up capital of less than 25 crores or a 3-year track record, a positive net worth. You also beautifully brought out about the differentiator between listing in a mains exchange and a SME exchange. You also talked about the compliance aspects of listing in an NSE and many positive aspects of actually getting your businesses listed on an NSE stock exchange. There are quite a few things that we have, but unfortunately we are running out of time. We also have a short Q&A session. I'm not sure how much time we have because we're really running out of time. Thank you anyway for such wonderful knowledge sharing, ma'am. Thank you so much. I now request Mr. Parth Shah to speak about merchant banking, the role of merchant banking and other avenues of fundraising. Before I do that, I would give a brief profile of Mr. Parth Shah. Mr. Parth Shah is brainchild for setting up the marketing division at Srini Shares Private Limited. His focus areas are valuation, SME listing, open offers, and corporate advising. Prior experience, he has worked in BSc for about 2 years. He's an MBA from BSc Institute and he is a topper in Mumbai University in BMS. I welcome Parth Shah and I request you to please start your talk, Mr. Parth.
Yeah, thank you so much for your kind introduction. And firstly, I would like to thank the chief guest for today for setting up the tone for the session, then Mr. CAKG Acharya, and for giving us a brief about how the financial discipline has to be maintained. And yes, Rachna, of course, for the kind words for listing on Emerge platform. Mainly, I'm here to talk about the merchant banking. What is the role of a merchant banker in listing a company on the Emerge stock exchange? So now, Emerge, the word in itself says that this is the platform meant for growth-oriented companies. Any company who sees itself growing like multiple times should plan themselves for getting listed on the stock exchange. If they plan for getting listed, what is the role of a merchant banker? I'll just, since we are running short of time, I'm being told to close this in next 15 minutes or so I'll not take much time. So now, since Rachna has briefed about the SME and main board of the stock exchange, something that I would like to add is clearance. So now, once you want to get yourself listed on the SME stock exchange, the clearance is from the stock exchange itself. You don't have to go to SEBI. On the main board of the stock exchange, it has to be done by the SEBI is the one point of contact for vetting the documentation. So that is one thing, and the time period. So now here, the entire process is for 3 to 4 months of time. I'll be touching the entire process in detail, but see the time gap required for listing on SME platform vis-a-vis compared to the main board of the stock exchange. It's over here it is 6 months onwards, but on an average it takes around 1.5 years for any company of main board to get listed. And the most important is criteria. So for main board, you require 15 crores of operating profit for 3 out of 5 years. Over here, as Rachna really briefed out well, that it is just like 3 years of track record and positive net worth and paid up capital less than 25 crores. So I would say a majority of the companies will be qualifying for getting themselves listed on the Emerge platform. Now, coming to the slides about migration. So now, if the company is listed on the Emerge platform of the stock exchange for 2 years, the company can migrate to the main board of the stock exchange by increasing the paid up capital to more than 10 crores and a market cap of around 25 crores and 2 years on NSE merge platform. See the beauty of the system. You can be on the SME platform for 2 years, and after 2 years, you can migrate to the main platform, the stock exchange. So it's just cutting your time plus the cost of listing. So now the cost of listing as compared to the main board, it is 1/10 on that of SME. So that is another big plus point that it is being offered to SMEs. And as Rachna briefed out about the myths that promoter have in their mind, that and one question that comes to us a lot of time is like, what is the right time to get listed, and what is the right size? So time, I would say, now the stock markets are at lifetime high. If we are not getting listed now, it's now or never. It's the best time that like over the transition phase that we see from 2011 till date. All the companies that have listed have raised funds over a period of time. They have obviously understood, they have grown, and over the period migrated to the main board of the stock exchange. Listing process is quite simple. Like we just have to, I'll just take this process in detail so that we are all. So now this is as I told you, 4 months time period. It's just assignments. Once we start, there is a document collection phase. So now this document collection is around 30 days, where like all the documents from incorporation to the audits of last 5 years, and all the documents related to promoter group, and total 9 chapters have to be prepared. So there is a due diligence phase, and there has to be a peer review audit that has to be done by an auditor, and then secretarial audit is required. And after that, there is a legal vetting of the documents of from like the entire prospectus that has to be vetted, and whatever legal disclosures has to be made has to be done by the lawyer. And then we submit the stock exchange the draft prospectus. After draft prospectus, they do the site visit, and once the site visit is done, then they will provide an in-principle approval from their end. So that is one thing that is plus. And after that, once we get the in-principle approval, we can file it with ROC, and we can get the approval for opening the IPO. So this is a tentative schedule. Overall, if you ask me whether SMEs can follow, yes, like on a lesser level, I have seen companies getting listed in 3 months also. On a higher level, they have taken around 6 months also. So it all depends on how well the company is, and how what is the stage they are looking at. Now, coming to some processes, means why there is a need of merchant banker. So merchant banker is one point of contact for each and every activity. So now there are many processes that are not like aligned once they're planning to get listed. So the role of the merchant banker is to ensure that that is aligned in the proper direction, so that there is once they're planning for getting listed, there is no non-compliance. One more question that I have been told to address is valuation. Valuation is one thing that every promoter wants to maximize, and every investor wants to minimize. But putting a light on this picture is that approximately 10 PE multiple is what investors accept. Okay, is it better now?
Parth, there's some disturbance on your side. I might have to check your mic.
Okay, is it better now?
Sir, little bit voice is cutting, sir. That's it.
Yeah, there's some disturbance.
Okay. Okay.
Somebody cannot meet. Somebody cannot.
Earpods, something. Not very sure on that.
Okay, just hold on. Is it better now?
Slightly better. Please go ahead, Parth. Please go ahead. Let's see.
Yeah.
Please continue.
Yeah, it's fine now. It's fine.
All right.
Yeah,
So
please go ahead. Thank you.
Yeah. So, sure. So basically, what I was telling you is about what is the role of the merchant banker, and what valuations that has to be made in picture. So the valuations that any entrepreneur can expect is around 10 PE multiple. So if he is doing a profit of around 5 crores per annum, he can expect a valuation around 50 crores at the time of listing. And going forward, over a period of time, we can bridge the gap between the right valuation and the valuations that is offered at the time of listing. one thing that entrepreneurs have to understand that you have to leave something on the table for investors. So now what happens is if you are coming with a very high PE multiple, there will be no room for investors to make money, and they wouldn't be interested in listing the company. So if we see companies getting listed at 5 PE multiple, we see a lot of investors confidence. And if we see companies coming up with 15 PE multiple, investors confidence obviously goes down, and there is they have the entrepreneurs have to find investors. So that is this is what we have to ensure, that if the valuations are done right, if entrepreneurs understand that I am coming for value creation. So one important point that Rachna touched was value creation. So now what value unlocking is one thing that everybody wants to see once they are listing on the main on the stock exchange. At this point of time, we are being valued in terms of net worth. But post listing, the market capitalization is one thing that has to be everybody looks at. So, example, at this point of time, the net worth of the company may be 10 crores, but over a period of time, if the actual valuation could be 100 odd crores, depending on the profitability of the company. So one thing they have to understand is it's better to have 75% ownership in a 100 crore company rather than owning 100% in a 10 crore company. So that is one aspect has to be drilled very carefully while making understand the entrepreneurs. One more thing, lastly, I was asked that what is the if there is no like if private equity is there, if they have already invested in the company and if they want to exit, would SME platform would be the right thing, or would beam platform would be the right thing? So see now it really depends on the private equity or the venture capital who have invested, and the transaction size. So usually if you see the transaction size is as upwards of 70 to 80 crores has also happened on NSE Emerge platform. So private equity players can also see this as an exit once they seen that the right valuations are in place, and the liquidity. See, obviously private equities have one thing in their term sheet that stock exchange listing is the exit for them. But overall, what I've seen that a lot of transactions have not happened in this space because of the valuation gap that they see. Overall, they are looking for a valuation of around 30 to 40 P multiple, but actually on exchange it's much less when they are listing. So private equity as an exit has not taken up much, but overall, yes, it has picked up. Now, coming to the offer document. So now offer document, there are some stages. The pre-IPO stage, the due diligence stage that has to happen. So basically, the process that is we have briefed in detail is quite simple, and the composition has to be maintained. That 50% of the directors has to be independent. And one woman director. So that composition has to come in to ensure that the board is right, and one company secretary and CFO has to be there. Apart from that, diligence process is quite simple. Whether have you see Mr. Acharya has touched it very briefly that now whether have we done financial discipline in the right sense. If they have done it, they don't have to worry about this. This exercise would be very simple, and closing it wouldn't be much time. Lastly, I would like to touch this is the intermediaries that has to be appointed, the depositories, the market makers, the bankers to the issue, registrar, and the legal advisors, to ensure that all the work has to be coordinated by the merchant banker, as I told you. And overall, I would say that the process is quite simple. You don't have to worry about the documentation part. The chartered accountants, the auditors who are there in place are really helpful. And if they have all data in place, listing could be really simple. I think so. I'm told to just wrap this up. So overall, I would say the merchant bankers has a key role to entire listing, and to all the fellow entrepreneurs and my CA fraternity friends, I would like to say that listing is one thing that overall is not time consuming. It is just the myths that has been created by a lot of people that is creating a gap between the right things. So you should come forward for listing, at least understand the process and take it up at the right time. Again, thank you all for inviting me.
Thank you, Parth, for bringing out the procedures and the process of listing so well. Thank you again. I think we're running out of time, but I think we have time for about a couple of questions. So let's go through that, and then we'll have the closing remarks from Mr. K. Raghu. Gurraj, one question that's come for you is regarding the importance of credit rating. See, we all know that credit rating is not mandatory, but credit rating, be it through any of the agencies, FICEL or ICRA or Dun & Bradstreet, any of that, how important it is to have a proper credit rating in order to have a good cost of borrowing, effective cost of borrowing. In fact, between credit rating and the cost of borrowing.
Yeah, you see, credit rating is of two types. One, we call it as the internal credit rating. As director in State Bank, Raghu was a director in the bank. We have an internal credit rating done by the bank before we give any loans to anybody. And we also rely on external credit rating. What you have been talking about, CRISIL, ICRA, and all those people, they are all the external credit rating. While you said that it is not mandatory, banks now make it sort of mandatory for every borrower who's borrowed up to a level of beyond 5 crores. They have to get an external credit rated for themselves. That would enable the banks to have their own capital adequacy intact, because for a high risk lending, they have to keep the higher cost, higher capital at the disposal. So that is how it works. So therefore, the relationship between the higher the rating, when we have something called an investment grade rating and a speculative grade rating. So if it is an investment grade rating like AAA or AA or A and up to BBB, it is all called investment grade rating, and anything below is called speculative grade rating. So once we know that it is an investment grade, then the rate of interest to the borrower will be very attractive. That is primarily because the bank feels that that particular investment is actually less risky, and therefore they have to. Therefore, they are very sure of getting back the funds. Higher the rating, lower the rating. That is the connection. Not only for
there's some echo. Gurraj, sorry about it. There's some echo. I don't know. Umesh, can you please check that? Umesh, sorry.
Basically, rating determines the risk perception of the customer to the bank.
Okay. Thank you, Gurraj. And one last question to Rachna ma'am. There's always a thought in the mind of an entrepreneur whether to go for a debt or an equity. So what would be your thoughts on what's the right approach to take, whether for a debt or an equity, and in what situation you go for either one of them?
Yeah. So actually, my thing was that it's a combination of both, because both are complementary to each other. They're not competitive to each other. Initially, what is important is that at the initial stages of your business, when you need funds, equity, specifically for traditional kind of businesses, which are into manufacturing and which have a setup with the respective factory, it is very difficult. You may find it difficult to initially get your funds from investors outside your business. So getting a public funding at that point of time will be slightly difficult. So it becomes important that you tap the banks at that point of time, and then subsequently you are able to move into equity. So it's a combination of an equity and a debt that should work together for a company. Being only a debt kind of a company creates problems, because your bottom lines get sucked away by the finance costs that you have, and hence you have sometimes, like, you hear promoters saying that I think I'm earning profits for the banks. So, to avoid that kind of a situation, to ensure that you have a right mix, it's important that you take a combination of debt and equity.
Yeah, I agree with you. So it's also your strength of your balance sheet, your ability to leverage, as Gurraj rightly pointed out. You need to balance between your debt and equity. Debt equity ratios has to be in balance. So I think all those factors probably have to be taken into account to leverage more debt. Thank you, Rachna ma'am. May I now request Mr. K. Raghu, past president of ICI and co-member at Rotary Bangalore Prime, to share his closing thoughts on the sessions, please. Raghu, you're on mute.
Thank you, Chetan. I think we had an excellent webinar this evening organized by the Rotary Club. I compliment Rotarian Arvind Salampuri and Rotarian Chetan for having taken this initiative, because this pandemic has really put a lot of SMEs in a very, very tough situation. And most of us being chartered accountants, we know how difficult it is for the SMEs to survive the pandemic. And it is absolutely essential for them to relook at their financial strategies And Gururaj Acharya has very rightly said that the SMEs should be innovative in their thinking now, whether it comes to manufacturing, whether it comes to finance. They need to have a good finance team to support them. And I personally believe that today SMEs have a very important role to play. And if they're able to set up their a good, strong finance team, definitely I think they'll be immensely benefited. And having been on the board of a public sector bank, I know how exactly the SMEs are finding it difficult to honor their commitments to the bank. And we have very closely seen whenever a SME has defaulted, whenever it has become an NPA, when we do a forensic audit as to why that account has become an NPA, we have found that in most of the cases, there has been diversion of funds. And very rightly, Gururaj Acharya has said that SMEs who have taken funding from the bank should not divert their funds. And when we have done a forensic audit, 9 out of 10 cases, we have seen that the funds have been diverted by the SMEs. This is something which we need to keep in mind. SMEs should be very, very, what you can say, disciplined in their managing financial affairs, ensuring they have a strong working capital management so that they're able to see that their accounts, are quite, are performing well. Then we had Rachna and Parth talking about how NSE can play a proactive role in SME listing. Very rightly, Rachna said there's a lot of apprehension among the SMEs. They don't want to lose ownership control. They are not very convinced about listing their corporates. And when we go about telling them, why don't you get your companies listed, they really, think twice and they shy back. There are various reasons not to go ahead. But I think as consultants, we can play a role to see how best they can leverage on listing, and then it's a good opportunity for them to unlock their wealth. Finally, friends, what I personally feel is that we have to look at new trends in funding. What is happening today? We are going through a digital revolution. We are seeing how the e-commerce companies are growing from strength to strength. Today, we have venture capital funds investing in a big way. Even SMEs can look at venture capital funds. So what is important is that if an SME wants to raise funds from a venture capitalist, they should look at strategic investors. Strategic investors who can add value to the company, who can bring in technology, who can bring in good manufacturing processes, so that they're able to leverage on their strengths and see that the SME can get funds very easily. Today, we have a lot of angel investors, HNIs, venture capitalists who can help, companies to sort of, invest in their companies. And we have seen how successful they are. Globally, when you go to Australia and America, you see crowdfunding is a big success. SMEs in Australia and America can raise funds on the internet. But in India, SEBI has still to come out with guidelines for crowdfunding. And when you go to Australia, the real estate sector, has something known as a BRICS exchange. If you want to invest in a real estate project, you can subscribe to so many number of BRICS. So that these are all the new trends in funding. I'm sure, way forward, India also would see crowdfunding becoming a reality. More and more SMEs will look at strategic investors. More and more SMEs will have venture capital funds, because today venture capital funds are interested only in technology companies, first generation companies, e-commerce companies. But I'm sure way forward, we'll have more investments flowing in, and all the SMEs will be immensely benefited. I'm extremely thankful to the President, Rotarian Vibhakar and Arvind and Chetan for having invited me. Being a part of the team at Rotary Pina, I feel immensely delighted to be a part of this webinar. I'm sure the SMEs would have been immensely benefited by this session, and we wish to continue educating the SMEs so that more and more SMEs are benefited by the new trends in financing. Thank you, Chetan.
Thank you, Raghu. Thanks a lot. I now request Mr. Ravi Shankar, Rotarian Ravi Shankar, our President-elect Rotary Prime, to propose a vote of thanks. You're on mute, Ravi. Ravi, you're on mute.
Good evening to all of you, respected ladies and gentlemen. On behalf of Rotary Bangalore Prime, I deem a great privilege to propose the vote of thanks. My very special thanks to our Chief Guest DG, Rotarian Nagendra Prasad, who accepted to grace this occasion. And I like to thank the District Vocational Director, PM Radhakrishna, to be part of this program. I take immense pleasure to extending my sincere thanks to our speakers, Mr. K.G. Gururaj Acharya, Madam Rachna Burani, and Mr. Parth Shah for giving us such a wonderful insight of financial disciplines and way forward to take the businesses to forward, where SME is in a very great distress situation. And I think this will help a lot of things, and this knowledge is really going to give us a great, immense direction to move forward and to keep ourselves in a disciplined way and take it a little forward. And I also like to thank Rotarian Arvind Salampuria, Rotarian Chetan Venugopal, Rotarian Raghu, who have taken all the efforts to conduct this webinar. Also like to thank our President Rotarian Vibhakar in organizing this webinar. But I like to thank all my fellow Rotarians and friends and all the dignitaries who are present here and patiently have attended and taken benefit of this webinar. I hope all of you have found this program educative and informative, and also we propose to organize more such programs, and we look forward to your active participation and support. Thank you all. Thank you.
Thank you, Ravi. Thank you.
Okay, thank you.